soldiers. This question is coming up from the topic of bank audit for May 25 revision test paper RTP. Nutan and Company has been appointed as a statutory auditor of Joe Bank Limited, a private sector bank. And basically, what has happened here, one Mr. Chahal, the engagement partner, who has been appointed to conduct the audit of what you can say the Joe Bank. Now, in such case, what has happened? There are certain observations made by the auditor. First of all, one of the non-performing asset was sold at a value higher than the net book value, and the profit was not recognized, but the excess provision in respect of the same has been reversed. So whatever excess provision that was made, actually it has been reversed, and profit was not recognized. That's the thing here. So the bank can always sell the non-performing asset, but it's a very rare scenario that when the it is sold at a value higher than the net bank value, net book value. That's the thing here. Second situation is that the interest in a state government guaranteed advance has been taken as a income, even though the advance has been overdue for more than 90 days. That's the thing here. So interest income on any state government guaranteed advances, it has been taken as an income if where the installment is outstanding for more than 90 days. Then further, what has happened here, the account has not been reviewed for more than 180 days. That's the thing here. So basically there has to be a review of the ad hoc limits, actually the sanction and other things. So in such case, it has not been reviewed for more than 180 days. So in such case, but anyway, it is treated as a performing asset. Then on the verification of outstanding forward exchange contract, the net position in respect of the foreign currencies was not squared and uncovered by the basically what happened by a substantial amount. Now in this case, what happens actually here also, one of the account where the temporary limit was sanctioned, which was 25% of the existing limit, and the tenure was 120 days. Okay, a temporary limit was given. Now in this case, based on these observations, whether it makes sense actually here. So how do you, as an auditor of a bank, how do you deal with this? What are the steps you will take as a bank auditor? First of all, in case of a sale of NPA where the sale is of a value higher than the net book value, the auditor is required to ensure that no profit is recognized and the excess provision has not been reversed. That's the thing here. So, but retained to meet the shortfall or loss that may arise because of the sale of other non-performing financial assets. So in this case, what happens actually here, so the treatment is not correct. You should, whenever any surplus is realized, you should not reverse the excess provision which is being made. Rather, you should retain to meet the shortfall. Suppose that there may be another NPA which is sold lesser than the net book value. So that is why the provision should not be reversed. The entry of reversal of excess provision would be cancelled in the books, and such excess provision would be retained to meet the shortfall or loss that may arise because of sale of other non-performing financial assets. So here the treatment is not correct. Coming up to the state government guaranteed advances, basically state government guaranteed advances which are due for more than 90 days would be treated as a NPA. That's the thing here. And for the purpose of the income recognition, whatever interest that is accrued, it has to be received, because once it becomes NPA, you have to recognize the income on cash basis or realization basis. So here the interest income recognized on such advance will be reversed, and it should be taken to income only when it is actually received. Only when there is an actual receipt, actually here it will be taken as an income. Otherwise, it will stand to be reversed. That's the thing actually here. Okay. And in case of NPA, the interest income should be recognized only when it stands to be realized. Then accounts for which the ad hoc limit was not reviewed for more than 180 days of the sanction, so it should be considered as an NPA, not a performing asset. Now its treatment in the books would be changed from performing asset to non-performing asset. That's the thing here. From the date when such change of the treatment was required. The net position in respect of each foreign currency should be generally squared and should not be uncovered by the substantial amount. The net amount of the branch in relation to such foreign currency should be squared off, and it should be covered by the substantial amount. So they have not squared off, so it should be squared off and it should be covered by the substantial amount. Further, the temporary limit which is given on the existing overdraft or CC limit, it should be the 20% of the existing limit. 20% of the existing limit it should be, and it should be, the tenure is given should not be more than 90 days. So the terms of additional temporary limits in case of such account would be 20% of the existing limit, and the tenure should not be more than 90 days. Having it as 25% in 120 days is definitely unacceptable. That is not as per the banking norms. Okay.